Welcome, Balaji. I'm deeply honored to host Balaji Srinivasan today, who's an angel investor and entrepreneur himself. He's built 4 companies, and one of the finest thought leaders globally, not only on cryptocurrencies but overall tech. Super excited to host him. And the best part is one of Balaji's last stint, which was at Coinbase, has recently listed, and we're super excited to hear from you, Balaji, on how do you look at trends, how do you catch hold of what's going to happen in the future, and essentially try to do something about it in the present. Over to you. Thank you so very much.
Thank you. Good to be here. Should I start with some remarks, or how do you want to go?
However, absolutely.
All right. Okay, great. Well, so basically, in terms of topics, I'll just give my background briefly, since you were kind to that. I was, formerly CTO of Coinbase, former general partner at Anderson Horowitz. Recently, I've been getting much more heavily involved in India. I'm actively investing in India with my friend Naval Ravikant, and actually want to bring even more capital into India via all the international funds and technologists and high net worth people that I know that are looking for the next growth center. And crypto is a major component of that, hence some of my articles at balajis.com. I recently wrote a few pieces, which you may have seen, on things like adding crypto to India stack and why India should buy Bitcoin at the sovereign level. The latter, whether the RBI actually does it or not, I just wanted to put a marker down saying, okay, well, if you had bought $1 billion of BTC or ETH actually, or a few different coins at the time that I wrote the article, then in 2 or 3 or 5 or 10 years, we can mark and see how many billions of dollars that might have been. Even if it's not acted on today, hopefully it's acted on tomorrow, and that becomes some kind of opportunity cost that we can quantify. And so, the India crypto picture, that's something I've been heavily involved in recently. I did a talk with Nandan Nilekani on Clubhouse recently on that, and working actively on figuring out how we can add crypto to India stack. By analogy, it's something where your smartphone can make domestic calls. You can also make international calls. So with something like India Stack, you can make domestic transactions. With crypto, you can make international transactions. And just like any Indian can be connected to millions of sources of information around the world thanks to the internet, well, crypto could connect them to millions of sources of capital, right? So that's kind of what I've recently been writing about. In terms of like portfolio and so on, it's funny. I don't even though I'm currently an angel investor, I don't self-identify as an investor. It's sort of something I do to kind of, for lack of a better term, like kill time in between founding things. But my portfolio, I think, has been pretty good. Most major coins: Bitcoin, Ethereum, Zcash, lots of others. Pretty much I shouldn't say any coin that's gone up, I've had a stake in, but a lot of them. In terms of traditional, which is funny to think about it this way, but traditional tech, Soylent, Superhuman, Cameo, Lambda School, Deal, which just got marked up to be a unicorn, Rome Research, Replit, Clubhouse, Golden. Those are just a few that I think are sort of recognizable, and then quite a few other like enterprisey type things. And prior to kind of getting into tech, I taught computer science and stats at Stanford, particularly computational genomics, statistical genetics, that kind of stuff, and founded a genomics company. Also founded Teleport, which we sold like a digital nomad company, and I'm on the board of Coin Center, which is a nonprofit for crypto. So that's kind of background. So just in terms of an overview, as I mentioned, I never actually considered myself an investor as a first thing. One way I think about investing is it's like 1% of the work and 20% of the return, but you have 0% of the control. Okay, so if you're just optimizing for return, you have a much, much, much easier life than a founder. Okay, you can just go and sit on the beach or what have you, right? And you know what? Like that's actually a good role for most people, because an investor, you just put in the capital and the capital works for you. The capital doesn't get sad or unhappy. The capital is just working for you for years. And if you can tolerate long periods of illiquidity, you can do extremely, extremely well, like all the early investors certainly in Coinbase did, and in other successful companies. But you get 0% of the control. And so if your goal is to build a future, if that's what you really care about, that is a trade-off. And so it's really a different mindset as to, you can't be as directive about the future as you can when you're an entrepreneur, right? Okay. Now, the as I think about it, the most important division in investing today is the pre-crypto and post-crypto division. And the reason is that crypto 10x's many things, from obvious things like liquidity. A crypto asset is fully liquid, whereas a traditional tech stock is not. And speed of return, that's also very obvious. The IRRs in crypto are insane due to, in part, to the liquidity. So it 10x's many obvious things, but also 10x's less obvious things like portfolio size and the ability to mark everything to market in real time, so you know what your portfolio's value is, which is useful for various other things. And so the most important thing you can do as an investor is to get into crypto. I tweeted this recently, but it's not an asset class, it's all asset classes. At the beginning of the internet, people mistakenly thought that, the internet was just, quote, an asset class, or rather it was a channel, so you had television, and then you had radio, and then you had internet. But it wasn't a channel, it was all channels, because you had internet television and internet radio, and of course internet with the form of new things like social networks and search engines that arose. And in the same way, crypto, it's not an asset class like alongside stocks and loans and other kinds of things. There will be not just cryptocurrencies, but crypto equities and crypto loans and crypto this and crypto that. If you go to sites like DeFiPulse.com, you can see that happening in real time. So your entire portfolio will be a crypto portfolio by 2030 or 2040. Just like, most books you buy are digital books, and you have to actually specify whether it's a digital or physical book. The name we use for it is TradFi, traditional finance, where it's done on pieces of paper. It's not very internationalizable. It is not, expressed in a smart contract. All of those things are suboptimal relative to the crypto version. The only thing that crypto is worse for is transaction speed, which everybody focuses on. But it's way better on other kinds of things, like, as I mentioned, like being able to have all your portfolio in one wallet. That's actually phenomenal. And transaction speed will get solved. So the point is, that is the most important thing I think I can convey as investors get into crypto. Learning custody, learning, upside, all this stuff. Lots of traditional investors have not made this leap, and I actually compare it to the desktop software versus internet software transition. Borland didn't make the jump. Borland didn't understand that there was enough money to be in the internet till too late. Only the great companies, Microsoft, Apple, and actually, to their credit, Oracle, only those made the jump. And many investors today are seeing high markups in their traditional tech things, their cloud things, their centralized things, and they're not seeing the need to actually make the jump into crypto because they don't feel scarcity, they don't feel the bite of the market, behind them. But I think that you don't actually get 10-year returns tonight. That quarter is built 10 years ago, as Bezos would say, right? And so if you're thinking about your portfolio in 2025 or 2030, you want to get into crypto today. And the way to think about it, by the way, is the crypto space. Coinbase, just went public with a direct listing rather than IPO, and it's got about 50 to 60 million users. That's a lot, but that's still basically 50 to 100x growth left, right? Like Facebook is, 3.54 billion people. I forget the previous number, but it's 3 billion-ish. And that means that you can go from 50 something to like 70x that number to 3.5 billion. And that's where we're going to go over the next, 10, 15 years. As they say, the first million is the hardest, right? And, the first 10 million is the hardest. And now crypto is like a country, like France, that's just expanding outward. And, it's like tens of millions, and it'll become hundreds of millions, and it'll become billions, and it'll become everybody. And so you can just focus on the crypto economy. And as you learn techniques, and it just keeps growing, right? Okay, there's some, should I answer some of the questions now, or should I wait till the end on that? Let me talk further about philosophy, and then, basically about 10 minutes, and I'll go through all the questions. Okay, great. So that's kind of the most important thing I wanted you to take home: the pre-crypto, post-crypto division. Your entire portfolio will become a crypto portfolio. You will also be getting into things that tech investors typically haven't, like loans and derivatives and whatnot, because crypto is sort of where it all meets. The hedge fund gets into crypto and they have to learn technical diligence, and the VC gets into crypto and they need to learn market timing, because the traditional venture capital model and even the angel investor model is basically buy the all-time high, in a Series B or Series C, and then hope it goes higher. And that's actually fine when a company is just going exponential like this, right? but buy the all-time high and hope it goes higher. It works in crypto if you believe in the secular long-term trend, but you have to actually have that as a thought. And sometimes, for various purposes, it might be smart to harvest gains or to sell at a top if you think it's going to drop, 100x or whatever, right? So, as I mentioned, crypto is basically, it's teaching traditional investors technical diligence, and it's teaching tech investors market timing and a broader kind of portfolio. It's basically merging these two things that have sort of come up over time. And the thing about tech or crypto investing, why do that, right? There's tons of things that you can invest in: public equities, real estate, oil and gas. Those are all important areas to understand and invest in. But basically, if you think about an investment as a type of cash flow, key properties include time to maturity. When is it going to pay you, and is it even known? What's the risk of going to zero? What's the liquidity over this period? And can you exit the position? And what's the upside, right? So those four kind of variables: maturity, risk of going to zero, liquidity, upside. Traditionally, tech and angel investments have been terrible on the first three dimensions. They've had a very long time to maturity, a high risk of going to zero, low liquidity. But they compensated for it with the fourth, which was the insane upside if they worked. Now, the thing about crypto in particular is it dramatically improves liquidity and time to maturity while preserving upside, which totally changes the game. It basically means you can take far, far more risk than you did as a tech investor. And people just don't understand what that means. It means that risk capital has been just totally unlocked globally. It's this global pool of capital, true capitalism that can descend into one person's phone, perhaps in India, if we connect the average Indian's phone to the crypto economy. Now, there's other parameters too in terms of investing, like how much capital can the vehicle absorb, and is it going to produce cash, and how active do you actually need to be? And there's this concept that people will say of, oh, spray and pray is bad. Well, actually, it's not. Or rather, skilled spray and pray is not bad. Meaning, if you threshold it, right, and if you say, okay, this founder is above a certain threshold, I think that they are smart, which you can actually diligence in one meeting. But what you can't diligence in one meeting usually is their diligence, right? So meaning you can't diligence their long-term commitment to something very easily. You have to sort of look at track record and so on. Pure mathematical, technical, verbal acumen you can gauge often in a sentence. But their staying power, their resilience, their fortitude, that's not something that's easy to know, especially for someone at the beginning of their career. So given those hidden variables, a portfolio approach on, everybody who's above a threshold on your observed variables, that's a totally reasonable thing to do. And, people had made this point: if you invest in all the YC companies of 2013, you put in 25K into each of them, you'd have completely crushed it. I mean, like 100x or something return. So simply investing in smart people at the angel level, that's why angel investing is actually, it's not that hard. Those smart people, of course, need to want to take funds from you. You need to be able to actually add value to them. What it's actually similar to in some ways, and why I like it, is it's sort of like the professor to grad student relationship. You have these young guns, and you can hopefully give them the wisdom of your experience and a few of the gray hairs there. Kind of tell them what they should or shouldn't do based on your experience, recognizing, of course, that the half-life in terms of the validity of that experience drops very, very fast in tech and in crypto. And the thing about this, about the whole angel investing model, there's a fundamental difference versus VC, which is, in general, as a solo investor, if you're investing your own capital, in my view, you really usually do want to invest early as opposed to late. And the reason is that your 25,000 could be multiplied by 1,000x if it's an angel investment. But if you're investing in a C or a D round, you're only going to get a 3x. And really, the only reason to invest in late rounds is if you have a huge amount of capital that you want to multiply. If you want to take 25 million or 250 million and try to 3x that, that's actually much harder to do than to 3x $25,000. So in general, I think that growth rounds, later rounds, are actually not that good for individuals, and you should probably be doing seed stuff. Once in a while, you will sort of buy the brand, or you'll back an entrepreneur who you like, and so that's fine. A second kind of thing is, nowadays, what I'm seeing is angel is for relationships and crypto is your moneymaker. Okay, so that's to say, angel investment is, it's still paper-based, right? There's still overhead. There's DocuSigns and HelloSigns. You don't have a mark to market in real time on your holdings. It really does feel antiquated relative to the crypto economy, where you can see a dashboard of every asset across every wallet, all of their marks in real time. And when you have a company that has both a token and the stock, the degree to which this is like the offline economy and this is the crypto economy becomes, or the traditional economy, the crypto economy becomes very obvious, right? So angel for relationship, crypto for upside, I think is a reasonable strategy in 2020. And one of the things that's happening now, which is good, is finally some regulatory clarity is coming out. I expect more and more, both regulatory clarity and regulatory backlash as some jurisdictions start to actually adopt crypto, the smart jurisdictions. If you see in Miami, for example, the mayor there has laser eyes. So does now the mayor of Jacksonville. I think probably the Texas, folks are going to do that. Wyoming folks have embraced that. So within the U.S., there are jurisdictions that are going extremely pro-crypto, which is awesome because they are trying to attract crypto investors and crypto founders and so on. Of course, there's places that are going anti-crypto. And so you're going to see more and more kind of bifurcation of these jurisdictions. And one thing that's important, that's worth knowing about, is more recently Hester Pierce at the SEC, and it's a U.S. SEC, but it is influential worldwide. So it's useful to look at simply as a precedent, even if it's not binding within the U.S. Other countries may model the regulatory regimes on it. Hester Pierce essentially outlined a way to issue a token in such a way that you have 3 years to decentralize it, and if so, that's a safe harbor. And so it's basically a path for a traditional company to tokenize themselves and to go crypto. And to be clear, this kind of transformation is similar to taking a traditional desktop company and putting it online. It's very complicated. It's not easy, and it's not going to be initially a push button thing where you're going to just be able to do it. I mean, you can certainly issue a token, but you need some concept or some utility around it. There's generic things you can do. You can use it as login. You can use it as payments within your app, that kind of thing. But if you think about it, companies like Adobe, for example, Shantanu Narayan, actually, a person of Indian origin, is running it. They took a while to get online and to turn their services into SaaS services, because Adobe is a very complicated desktop app. But when they did it, it was transformative for everything, because it turned into a subscription service. People just, re-upped every month. Didn't have the huge upfront sticker price of, the sticker shock of Adobe Photoshop or what have you. And it was just like vertical for the stock price, right? So that kind of transformation, the desktop to internet transformation, as vertical as it was for Adobe, that transformation to the crypto economy, many of your portfolio companies may go through that. And now there's some pathways potentially to do that. Okay. So talked about, kind of the high level, talked about what I'd learned in investing, talked about, tech investing in the pre-crypto era, talked about how Angel was, relationships in crypto as a moneymaker. And then, let me do a sort of comical, continuum of the founder angel VC, right? Founder is the easiest and the hardest, right? It's good because you have 100% upside and control, but it's bad because you're not diversified. You have 100% downside and you're using labor as opposed to capital. Angel, it's basically the best if you're, if you BYOB, bring your own money and distribution. It's good because you can diligence a deal, write a check, mostly ignore it. Outside of inflection points, your capital is doing the work. The only bad is you need to invest your own money. You have 100% downside, and you need to have some reputation or deal flow, or you have to go out and search out these investments. Crypto, again, changes that, because if you're smart, you can start with $100 and you can go into the crypto economy and you show me that you've turned that into $10,000 in 2 years. Okay, that person is either lucky or smart, but I like people who can get lucky multiple times, right? That's actually good. Often that kind of luck is being in the right place at the right time, and often taking a risk. Everybody wants a piece of the reward. No one wants a piece of the risk. And being lucky often involves a degree of risk tolerance that's not appreciated, because to be lucky, you need to often take a chance, right? Now, as an angel, you want to be careful about setting the right expectations. You're putting in capital rather than labor, so that's pretty important, just to make sure that you set expectations and you can help at inflection points, but you're not like an outside executive necessarily, right? VC is basically, there's a lot of good about VC. You can get, a huge chunk of the upside for, as I said, like 1% of the work with 100% of, I shouldn't say 100% of someone else's money, but a big chunk of someone else's money. You have a GP commit. But the VC industry, I'm not sure it'll be around in the same way in 5 or 10 years. And the reason is that capital is now very quickly becoming a commodity. People have said this for a while, but it's really happening with sites like Republic.co or AngelList or CoinList. As I mentioned my friend Naval Ravikant. He has basically single-handedly invented something I call Cloud Hill, which is the new Sand Hill. Raise your fund online at AngelList, raise your round online at Republic, and raise for your protocol online at CoinList, right? And so the thing about this is, he set out 10 years ago to just sort of disrupt VC, and both AngelList and A16Z have done so from different and totally complementary ends, and certainly do a lot of deals together. But now capital is on tap. At Republic.co, anybody can raise $5 million a year from the crowd. And how do you raise money? Well, here's a link. Here's my checkout. Go and buy it if you want, right? So your investors now become a lot more like your customers. And one thing I've thought a lot about is that high stress in general in business comes from low sample size relationships. That is to say, if you have only a few employees or a few board members or a few investors, if any one of them goes south, oh, I've just lost 20% of my investor base. Oh, that's a big deal, right? Whereas if you have 1 million customers and one of them cancels, I mean, it's you never want a customer to cancel, but you can deal with it more statistically, right? It's more tolerable. It's not a knife in the heart. Oh, 20% of our customers just went away, right? This is also why enterprise is sometimes harder, because like a single big customer can be more concentrated than consumer. Consumer has other difficulties. Point is that with the new commoditization of capital, your investors and customers bleed together. And so your presentation to your investors is more like a public markets call. Or a shareholder address or something where you're not speaking personally to them. You don't have to worry about the individual psychology of one board members, their idiosyncrasies or what have you. You have to like compute this thing in your head where you're like, okay, I need this guy sign off for this, but he's mad at me because of this. Okay, and she is happy because of that. Like this differential calculus of like board member psychology. You don't have to do any of that, which I've seen lots of portfolio companies have to do. Instead, you factor those out and you have just a capital base that's like your customer base. You're offering a product for a service, which is basically your equity, and they hope it goes up. And you give, your responsibility is a quarterly address, and they don't like it, they sell. Ta-da! Super interesting, awesome, great, social contract. The sell part is, of course, harder because the full liquidity isn't there. But I expect the secondary markets, whether it's second market 2.0 or something else like that, those will become more sophisticated as well. And so what happens now is every investor needs to distinguish themselves on something else, especially an angel investor, 25 thou or whatever. I mean, that's now, a few people on Republic, that as that gets out there. And so what you're going to distinguish yourself on is probably something along the lines of your distribution. And by distribution, it's like how the company reaches customers, basically it's connections, right? So product is merit, distribution is connections. So it can be your social media following. It can be your connections to large enterprises like Coca-Cola will try it out. It can be actual distribution deals, like, hey, I can get you into Johnson & Johnson. Salesforce will pitch your product if it's a medical company, right? Because I know that senior executive and, we've made money together before, so he'll take the call, right? So distribution is basically who in the social network can your investors ping, both the consumer broad level and then the enterprise level of very specific business context that they can route you to, right? And so once you start thinking about your investor network as your distribution network, now investors need to distinguish themselves on this. And therefore, like, the investor who kind of does the old school thing of maintaining kind of a low profile and so on, that's reasonable, by the way. I'm actually in favor of pseudonymity. I think we're probably, as I've talked about in other talks, I think we might be the last generation that uses your real face and name online. I think you'll use AI to kind of have whatever voice or face you want, no makeup or anything. But I do think that it's okay to maintain a low profile in that sense. But there are pseudonymous investors now, like Metakovan, Vignesh. Well, that's his name, but he gave it up. But Metakovan and some of the folks in crypto are pseudonymous investors. So you can kind of match the two. You can have both the public profile and you can be pseudonymous, and that's kind of the ideal for the investor of 2025 or 2030. Where you're giving distribution to the folks you're investing in, but you are not like, disclosing all this other stuff so that crazy people come and stalk you at their residence or whatever, right? So that is kind of, in terms of distribution, value add. As I mentioned, I think that the VC industry is is actually in the middle of disruption, even if it doesn't realize it, because nobody needs to come to Sand Hill anymore, right? The economy has gone remote, right? The crypto economy has gone vertical. The international founders are going vertical. And so the entire model of come to Sand Hill Road, come to Sand Hill to raise your round and go to Wall Street to exit, both those are gone, because with crypto you can both raise and exit online. And the only thing that's holding that back is regulations and conventions, and even that is starting to melt and disappear with folks putting in the laser eyes or putting the Bitcoin white paper on their government website. Like Estonia, for example, put the Bitcoin white paper on their government site. So that kind of summarizes just sort of a little bit of a stream of consciousness, but a few major topics. How I'm thinking about Angel, I'm thinking about crypto, I'm thinking about the present and the future. Maybe with that, I can go and take a few questions.
Sure. Sure, Balaji. Thanks so much. That was really enlightening. So I have a few questions from the audience. Essentially, a gentleman asked, how would crypto be adopted by the masses? Because it's still fairly complex for majority of the people, and how do we see it being used on a day-to-day basis?
Well, it is something which is at on the order of 100 million people worldwide. Right. So Cambridge, it's basically comparable, I think, to where the internet was in 2000, where the infrastructure is being built out. Everybody's heard of it, but you don't need to use it on a daily basis yet. Right. So everybody's heard of it. Infrastructure is built out. The first millionaires, billionaires have been made. There's a huge surge. People know about it from kind of the stock market and the amount of money people are making. But the internet in 2000 was actually in many ways just beginning. And how did it, become user friendly? Well, a huge inflection point was the iPhone, like 6 or 7 years in. There's also like making the user interfaces better, because it was early modems and so on. If you remember that, beep, right, like all that stuff. And it was 1,000 things. And I think that's going to be similar here, where I think one thing that's going to make crypto go very big is virtual reality and video games. And the reason for that is when people are in a virtual reality, it's natural for them to use a virtual currency. You're with somebody from Brazil, somebody from India, somebody from Japan, and national borders are actually not as material anymore. And so you need some kind of international asset that you can send as easily as you can poke or like or tweet at somebody, right? So I do think VR is going to be to crypto what the iPhone was to the internet. I think so that's a medium to long-term thing. Oculus Quest 2 keeps getting better. Okay. And then in the short term, I think that basically the actually let me see one second. Time. Okay. In the short term, I think that lots of companies are making it easy to interface with crypto. Just click a buy, click a sell button. I think you're going to see more airdrops of tokens where maybe people have to do something in order to get the token, but it's not too hard, right? And they just receive it without risking capital. And I think that there's a lot of work to be done on the user interface, but I think that itself is an engineering project where, as transaction fees and so on come down, you're going to see people start to devote more energy to the front end as the back end starts to, I shouldn't say become usable, but become more usable for other tasks. All right, let me pause here and get the next question. You muted yourself, Rahul. Yeah, go ahead. No, you're muting. You're muted.
Yes. Yeah, so just going to yours and then chat back, right? Like it's essentially going to be like ISD enabled on every phone, right? International trade happening. Two questions on that. One, a lot of people are scared because the prices fluctuate, and second is that there's a massive fee, right? How do you? What are your comments on that?
You say massive fee?
Yeah.
What do you mean by a fee?
Like a charge, essentially, which kind of exists today as well for international transactions.
Oh, you mean transaction fees? Oh, got it. Okay, I didn't understand. So basically, with respect to volatility, no downside, no upside, right? If it's totally stable, you're not making any money. No one's taking any risk, right? And so by the time it's fully stabilized, everyone's like, oh, like this, they come out. Well, sure, it's achieved its destiny, and it's at, it's stable at $1 million or 10 million or whatever dollars per coin that it ends up at, but all the upside is gone, right? So, especially among an audience of investors, you want volatility, right? like volatility is interesting. If it's not volatile, then pick something else, right? Now, of course, downside volatility is something you have to buffer against, but that's where being smart about capital allocation and being a truly long-term investor comes in. The thing about crypto is it seems like fast, easy money, but actually it'll kill you if you do that, because anybody who gets in it purely for the money and just sort of what people call apes into it, they just sort of imitate an ape into an investment. You don't have any theory of when to sell or how long to hold or whatever, right? Personally, I'm not an active trader. I'm a buy and hold investor, and I put in money that I never need to liquidate, and I just hold, and I just have a long-term portfolio. And then you're like, look, you might say, okay, I'm going to sell at 2025 or 2030 or something like that if you must for your LPs, right? If you don't have LPs, you don't even need to do that. But that's how I think you get past the volatility is you have a long-term thesis on the thing. And so I don't even care. But there's a lot of people who really do care about the short-term stuff. What's great about crypto is it's selecting against the people who do. All right. If you're very short-term minded, if you're like the kind of person, I'm not saying you or any specific person, but if somebody's on social media and they're like, Twitter moments told me this and they told me that, and like you kind of just get your head just kind of pushed around, then crypto will select against you, right? But if you have that long-term patience, you'll be fine on volatility. On the second point, in terms of transaction fees, so an important thing is that there's like several different kinds of scaling things, so-called L2 stuff. There's also L1 stuff in the sense of new blockchains coming out that scale more. Some of these transactions have moved to other chains, like the Flow blockchain for sending NFTs. Solana is actually a pretty high-performance blockchain, which is also used for derivatives and other kinds of things. Some of these things will move off Ethereum or Bitcoin onto other chains. Some of them already have. In other ways, things like Starkware and Cairo are ways to use so-called zero knowledge to scale on chain. The main thing is it's sort of like going from modems to DSL to 3G to 4G LTE. It's a lot of sophisticated engineering to improve bandwidth. But if that's the only thing that is the limitation, you're like, oh, it doesn't scale. Well, it will, right? I mean, there's literally billions and billions and billions of dollars of energy and technology going into this. And the important thing, and this is a big point, which people don't get, with the things I just mentioned, where you're scaling bandwidth with the internet, those were mainly physical buildouts, right? Like Reliance Jio had a huge physical buildout in India with the towers and wires and so on. But blockchain scaling is disproportionately software driven. So when the algorithms get debugged and deployed, and if they work, you suddenly see on-chain capacity go vertical like this. That is a huge source, I think, of the next boom that people aren't taking into account, that when software works, software can just go vertical like that. And so capacity may be a limit, and then just the whole thing just totally takes off, like a rocket to Mars.
Got it. One common question I got from a lot of friends is, what got Balaji interested back in India?
What got Balaji interested back in India? Several things. I've been tracking India over, like, obviously my whole, life, right, in some ways. And I think that, when I was a kid, we came back to India, and the gap between like the standard of living in the U.S. and India was very, very large, right? And then more recently, it has narrowed, but it's narrowed on dimensions that I wouldn't have expected. In particular, the standard of living in the U.S. has plummeted in many ways, right? With riots and shootings and fires and power outages and poop and crazy people and so on in San Francisco. And just generally, even worse than that, is sort of a breakdown in people just even talking to each other or whatever. Whereas in India, it has, to an impressive degree, improved. And, it's funny, it's sort of trite to point out, well, Starbucks is there, and there's actually paved highways, and, the airports work and so on. Like, that's just something, though, that relative to the 1990s or the 2000s, if you did like a stop motion thing, it's like a huge improvement. And people, this hedonic adaptation, people take something for granted very quickly, right? Now you have Grab, now you have Uber, and you kind of forget what it was even 2 years ago, right? Oh, I can send an email. I get frustrated if I have to send a snail mail. But India's improvement in standard of living has been absolutely dramatic. Now, of course, there's still a long ways to go, but the curve is upward. And to use a VC or angel analogy, I'd say like India's in its like Series C or something like that now. It's really it's still got a ton of growth ahead of it, but it's gotten past a bunch of proof points, right? And whereas the US is like this gigantic, arrogant corporation that's actually in decline in many ways, which people haven't really realized yet. And there's pieces within the US that are still going to do, I think, okay. But as a whole, for example, there's Wyoming and Texas and Miami and so on. There's clusters of entrepreneurship there. But as a whole, it's not the thing it was, because almost the country doesn't even exist anymore. It's just a bunch of people feuding with each other. And the only thing that is in common among them is the dollar. And the dollar itself, people may not have full faith and credit in it by 2025 or 2030, right? And so so that's like kind of one piece. And the other piece is the sort of cultural piece where India has risen with technology. And, so has China, by the way. But China has kind of, taken this turn of being, the Xi Jinping controlled state, right? Like everybody has to read Xi Jinping thought and so on and so forth. Now, look, it's a huge country. They do a lot of impressive things. I'm not just going to I can see there's lots of criticism of China. I don't just bash China, whatever. It's like the US, it's like India, it's complicated. But India, I think, has a possibility of taking a different turn, hopefully, which is basically being internationalist and capitalist, because India can kind of maybe steer an intermediate between the US and China, where both of them are going into the second Cold War, right? Already kind of embarked on it. India being the number 3 power in many ways already and coming, could be an intermediary, not siding with either side, but actually promoting a different strategy. Now, what that strategy is, it shouldn't just be naive kind of contention for world domination. Oh, you're doing the dollar and you're doing the yuan, I'm going to do the digital rupee. The digital rupee is fine domestically, but it's not going to be an international, unit of account like the yuan or the dollar. Instead, what India can do is it can embrace national stacks and neutral protocols. National stacks being, like the Indian versions of Flipkart and Amazon and so on, in the same way that Facebook's free basics was turned down in favor of Reliance Jio. India's actually shown the capability of building national stacks. India's got Aadhaar, it's got UPI, it's actually exceeded the West in many dimensions. So you package this concept of national stacks, which are both the public stuff, like I just mentioned, and then private stuff, whether it's an Indian Twitter or an Indian Facebook, share chat and coup and so on, right? Which are all fine. So you have the national stacks, and that would allow India to export essentially a software stack to each country. So there's India, there's Hungary, there's Brazil, there's Japan. All these countries could run their own US or China independent national software stacks where they've got kind of root administrators within the country. But as a complement to that, the second component would be neutral protocols, so decentralized crypto protocols between countries. So to answer your question, that's another important component, which is India can kind of promote this alternative vision beyond the second Cold War. And culturally, I think that would also mean, a bright sun as opposed to the black mirror vision of the West, right? The West is seeing technology rise as it is declining as a society. It may eventually have a national rebirth, just like India and China did, after a century, but it's got a long ways to fall. And India, by contrast, over the last 20 or 30 years, has seen its fortunes rise with the internet. And so, I've mentioned movies like Super 30. I love that movie simply because it could never, ever have been made in the modern US. It's way too optimistic and positive about tech. It takes as a background a cultural assumption by everybody in the audience that working in technology is good, right? Now, one thing we need to do, though, is there's a scene in it where he's saying, you can go and work at NASA, you can go and work at this, you can work at that. Forget NASA, it should be like either ISRO or SpaceX, right? Let's say either the Indian Space Research Organization or an international company, like the naive, let's just, think of the American thing as the best, is no longer actually a positive anymore. And that's something I think we want to fix culturally. So those are a few different dimensions as to why I've been getting back into it. A, it's improved a ton. B, I think it's going to be pivotal in the second Cold War. And C, I think it can be culturally pivotal in, sort of setting a bright sun as opposed to black mirror thing for the full world.
Super interesting.
You're
two more questions.
Oh, go ahead. Yeah. Great.
Yeah. One, what kind of companies in India are you bullish about? I if I'm correct, I know one because the founder is a friend. But there's very excited to hear. The audience wants to know what is exciting for Balaji.
I am very interested in India as a digital factory, even more than India as a market. And, because, there's 1.3 billion Indians and so on, and but many of them don't have international level consumption capacity. They don't have huge amounts of savings and so on. But a lot of them are smart. A lot of them are connected to the internet. So what I'm interested in doing, both first party and third party. So I've got this new site, 1729.com, named after the Ramanujan number, which I've had for a while. I've actually wanted to do something with it for a long time. Part of the idea is to help build India and the world in general into a digital factory where anywhere there's a phone, there's a job. So, because you've got crypto, because the world economy has gone remote, and because you've got several hundred millions online, that's, demand, that's supply, and that is the connective tissue in the form of crypto for both currencies and contracts and so on. So you put all those together, and that is the crypto economy, right? And any job basically seeks out the person in the world who can do it most efficiently at the lowest cost. You could call it, quote, BPO, business process outsourcing, but it is to that sort of what like Uber was to Zipcar. Maybe it's like the next gen version of it, right? So this is something I'm pretty interested in. I've done investments in like Pepper Content, .in, which is like this. But India as a digital factory is an important part of my thesis. So things like that I'm very interested in. And look, of course, India as a market is also great. Don't get me wrong. But producing things for the world is important. Second thesis that's related to this is I believe India, and this always sounds kind of crazy when I say it, but then let me edit it. I think India by 2030 can become a media superpower. And what I mean by that is China is a tech and manufacturing superpower, and they ascended from making plastic stuff at Walmart in the year 2000 to now making drones and iPhones. And a lot of people are very contemptuous of Chinese manufacturing in the 90s and the early 2000s. Oh, they'll never be as good as Ford tough, cars or whatever, right? They'll never be as good as Mercedes or BMW. And there's still, hills, mountains they have yet to climb. They don't yet have, the semiconductor fabrication capacity of a TSMC or a Samsung, for example, right? So still levels they need to hit. But nobody really talks down China's manufacturing capability anymore. They're actually some of the very, very best in the world. And that was actually a chip on the shoulder that they had for a long time. A colleague, Josh Wolf, says, chips on shoulders, put chips in pockets. So a little bit of chip on the shoulder is sometimes good. Prove them wrong is actually often a more powerful motivation than mere money. And so with India, though, India's often been looking up at China, and China's been looking at the US. And I think there's an opportunity to take a different path, which is rather than India being a tech and manufacturing superpower like China, I think it can be a tech and media superpower. Why tech and media? Well, tech is obvious. India's pretty good at software. It's number 3 generator of unicorns in the world. But media is something that India and the Indian diaspora does much better, in my view, than China. Indian Americans have, achieved lots of prominent positions in journalism. Obviously, there's M. Night Shyamalan in Hollywood, but a lot of others, Aziz Ansari and so on. But Indians also at home have done things like animation, like the computer graphics for Tenet. Obviously, there's Bollywood at home. And there's, a tradition of basically arguing in English, for lack of a better term, right? And so I think that there's a lot of latent capacity there. We've talked about outsourcing for technical talent, but not for verbal talent. There's tremendous amounts of writing capability, visual, artistic, imagery, all the kind of stuff can be done in India by people who work hard and are ready for the opportunity. And I think the critical thing when I say India becomes a media superpower, I'm not saying Bollywood takes over the world. The reason I say that is if you think about, the chair that you might be sitting on, that's probably a made in China chair. Okay, at least in the US, it's probably made in China, all right? But it's not a Chinese chair. Like you couldn't tell without looking at that logo. It's an internationally competitive chair, right? By contrast, let's say something like a red envelope, right? That is a culturally distinctive Chinese thing, which you wouldn't recognize outside the country, right? So by analogy, Bollywood is culturally distinctive in India, and it's fine, it's good, great, love Bollywood. But something like ArcelorMittal makes a global bar of steel, which is just internationally competitive, right? So what's a vision for India becoming a media superpower if the media that's being generated is not recognizably Indian, but it's global? I think a huge part of it is going to be around computer graphics, animation, and VR. The decentralization of Hollywood means that distribution and production are now able to be done on a laptop. You can distribute, of course, through a social network. Less obvious is that AI video, computer graphics, virtual influencers mean that a motivated individual can create an entire cast of characters on their laptop if all they need to know is how to code. Accent goes away. No one can discriminate against you on the basis of your accent because you can code these characters having a British accent, Japanese accent, whatever. They can speak in tongues because you have, you have AI that can actually generate the speech from text, right? And you can reshoot the thing from 20 different camera angles. This is something that I'm very, very interested in, is the decentralization of Hollywood, so that everybody can tell their own stories. You can do a very high production value version of, the Ramayana and Mahabharata. Of course, those people have done that within India, but every culture around the world, the Brazilians, the Hungarians, they now get the tools to do this type of stuff, and India equips them with those tools, and you decentralize Hollywood, right? And the critical thing is, this is not trying to go straight down the middle and doing feature films. Straight down the middle would be like trying to disrupt Microsoft on the desktop. The kitty corner attack, the diagonal attack, was going and doing the browser or doing the phone and doing things that Microsoft hadn't yet done, and moving into the white space, which eventually dominated most of it, and now the desktop is just an interface to the browser. So India becomes a media superpower by embracing computer graphics, virtual reality, augmented reality, virtual influencers, AI video, and computer-generated content in general. It obviates all the issues associated with accent, all the issues associated with content creation, and then you do distribution through social networks. All right, so let me pause there.
That was amazing. One of the audience members wants to ask you a question. I'm just bringing him on stage. Akash, join us.
Hello. Yeah, can you hear me? Yeah. So yeah, hi Balaji. So I just wanted to ask, like, how can we simplify crypto for India? I mean, there is a lot of fear in India that RBI will introduce their new currency and crypto will be banned. So how can we increase the awareness in India for mass adoption in India?
Well, so first is, I think there's folks in the government who have good intentions. They're thinking, protect India from outside bad influences or from, bad actors using funds, et cetera. But I disagree on their implementation, because I think that, such a ban, for example, wouldn't actually ban crypto. It would cause capital flight. It would cause capital to not land in the country. I mean, basically, read naively, the proposed ban would stop Elon Musk from landing in the country, because he wouldn't be able to put SpaceX there, since Tesla owns huge amounts of Bitcoin, right? So you have to think through the second order effects here. You're going to stop, people from investing in all these now public markets companies, like Fidelity holds large amounts of Bitcoin. Like essentially the ban starts to become infeasible as India will realize it's walling itself off from global markets, or even worse, it's just enforced sporadically and haphazardly, and rich people can go and set up, like a foreign company, which then invests in crypto. There's always some workaround in that fashion, right? Like, you can invest in an American company that then goes and invests in crypto, and you basically pay an extra fee, and a poor person can't do that. So effectively, such a ban would really only be a tax on the poor. It wouldn't work. With that said, I think it's being reconsidered. I think, like, actually now that we're talking about adding crypto to India Stack, we're looking at actually ways that it can be compliant. The India Stack APIs obviously have APIs for KYC. They have APIs for identity verification. If you add a crypto to India Stack, I think that addresses a number of government concerns, and also makes it potentially user-friendly, because every app that is integrated in India Stack could then add crypto with hopefully just a flick of a switch, like within the SDK. So I think that's one vector. I think the second vector is, as I was talking about, like, India becomes a media superpower. So I've actually got a task that I put up. If you want to do something right now, like just be a pro-India crypto activist, here is a live task. I didn't tweet it out yet, but take a look here. Boom, it's put it in the chat. So video memes on Indian crypto. So putting up $3,000 for fun memes on Indian crypto, okay? And so this will hopefully start to get attention for why the crypto economy is something that it should be brought into India, right? And this is kind of a grassroots type of thing, but often a meme is very easy to understand. To your point, like, how do you make, like, the average person get it? And whether it's a film clip or it's an image or something like that, I think this helps. And of course, there's many other things, but those are two off the top of my head.
All right, thank you.
Great.
Sure. Balaji, do we have time for a couple of more questions? There are a lot of questions popping in.
Sure. One or two more questions is good. Then I may have to.
This is a person like you who's deep in tech. How did you end up investing in Cameo?
Oh, well, Cameo is actually similar to Earn.com, which is what we sold to Coinbase. And I respected the Cameo guys, and they, I think, respected me. And we got to talking. And at first, there was sort of like, are you competing with me? Am I competing with you kind of thing? And, I'm a win-win person. So I'm like, look, I would love to invest in what you're doing. I think it's it's going to grow into a different kind of organism. Often there's things that start and they look similar early on, but the disposition of their founders, the kinds of things they think about just become very different. And Earn basically became, I mean, it's at least $1 billion. It's at least $1 billion of Coinbase's multi-billion-dollar valuation, because it brings in hundreds of millions of dollars annually in crypto. Because Coinbase Earn has become the largest scale customer acquisition channel in crypto. Basically, every project can't run ads on Google or Facebook, so they use their crypto on Coinbase to acquire customers. And Cameo became something very different, which was it became like celebrities, going in and doing interviews. But at the beginning, it looked similar because we had VCs on there, and some of those VCs were like quasi-celebrities. So did Cameo get the VCs, and just turned into just very, very different things. It's like a flower growing in two totally different environments, right? So, I love what the Cameo folks are doing. I think that's a big piece of the future as well, which is massively increased global labor liquidity. Basically, you can't just say, I want to make money right now and just start making money. You can say that for information. It's not yet there with labor liquidity. Cameo is like one piece of this, but I think there's much, much more that we can do with this.
Sure. A very interesting question from Araman came, the Chinese government essentially built SEZs, right? Special economic zones, right? Whereas on your point of India being the media capital of the world, or essentially where a lot of media work could happen, Indian government is very, very pro censorship. So how does that work?
So it's basically about being resourceful. I think I think that you should always be compliant with every law, and if the laws prevent you from doing what you want to do, then emigrate or operate overseas, and don't just block your home country if that's legal to do. And the thing is that the content that is it's tricky because everybody will accuse each other of censorship and so on. Certainly China censors a lot. America has become incredibly censorious, right? And so I think like almost every large social network is going to tamp down on memes and negative things that they think of as negative to their culture, as determined by the folks in charge. I think crypto becomes a demilitarized zone where it's, quote, global free speech and free markets, for better or for worse. But yeah, there's millions of people in the Indian diaspora. You can work overseas, and you basically just have to be, it's just like with crypto, if one jurisdiction bans you, you're like, okay, and you just migrate to the next jurisdiction, you operate in the next one, right? Now, with that said, I think over time, if you build into a media superpower, folks will feel the value of maybe unlocking some of that, and that I think that on net, even if it's messy, on balance in the medium term, free speech wins. On the third hand, basically, you can't have like a situation like where Twitter is deplatforming people in the US, but it is keeping them up in India, or vice versa, like double standards where India is sort of treated as a digital colony. I'm very much against that. And so I think that this is a complicated thing where it's hard to reduce to a soundbite, but the short version is global censorship-resistant platforms will exist in the form of crypto. Within any country, comply with the laws, but work within the laws to advocate to change them if you see fit. And then if you need to build something that you can't do within a given country's laws, then put up the backpack and emigrate, because that's actually like the kind of sacrifice you need to build a company.
My last question, I know you're in Singapore, and in your and Nandan's chat, I heard setting up your own countries. Are you setting up one?
Am I setting up one? Well, I'm writing a book on how to do one. I'm going to paste a link into the chat here so people can kind of see the first chapter. And I think basically that's actually the next step, right? In the sense of, you went from start your own company, Google, start your own community, Facebook, start your own currency, Bitcoin and Ethereum, start your own country. I do think that's what's next. Or more precisely, I think there's an intermediate, which is the 2020s will be about startup cities, and the 2030s will be about network states, right? And so start your own city, that's just crazy sounding, but totally legal to do. Everybody there's a path to do that, to turn unincorporated land into incorporated land. And if you look at Prospera.hn or culdesac.com, or Pronomos.vc, this is the next crypto, startup cities in the 2020s. People don't even, like, it's, when I say that, it's like, what was crypto in 2011, right? Only crazy people thought that, this imaginary digital currency could become a multi-trillion-dollar thing. those crazy people understood that actually a huge part of the value proposition of any city is its rule set, and another part, is its I should say, today's crazy people understand why do we think that startup cities can be a big thing? Well, A, people are much more mobile than ever before. Modulo COVID, they're still more mobile, even given Uber and Google Maps and so on. B, people they value mobility now because the vaccine is like this unlock, right? Like obviously, India is still, it's going through the hard time right now. I'm aware of that. I know we're going to donate to that from this program. But there is another side. Israel has shown that there is another side. We will get through this, okay? And that post-vaccination world, people now value their mobility much more than they did before, like the ability to move. And so I think that startup cities will get populated in the 2020s where people are like, look, life might be short. I might die. I want to be around people who share my values. I want to migrate to them. Similar to like the communes of actually America in the 1800s, where there were like the Oneida Commune, like the Midwest was this place where people could just start new societies based on whatever you thought. And the key concept is these startup cities, many of them will start online first, right? So you build the city in VR first and then materialize it into the physical world. So you can read my kind of article here at safety29.com. I just pasted it into the chat and give me your thoughts and tell me how crazy I am.
No, thanks so very much. This is incredible. Thank you so very much for taking the time out. Just to end it on a fun note, there's also an Indian godman who actually bought an island and set up his own country. So you rightly said, India is leaping ahead in many ways.
Well, I want to make one point on that, right? So I actually address that in this piece, which is normally the reason that people think of starting new countries as fanciful is like the whole micronation concept, right? So the most obvious unconventional approach, and the one most people think of when they hear the concept of starting a new country, occurs when an eccentric plants a flag on an offshore platform or disputed patch of dirt and declares themselves king of nothing, right? And so the issue of this is, them and what army, who cares about this country, is just existing in their head, et cetera, right? However, if you have 100,000 or 1 million people online who consider themselves citizens of a new digital state, and they've basically been building this whole VR environment, and they have a cryptocurrency, and they've bought pieces of territory all around the world, apartment complexes and cul-de-sacs and ranches and so on, and network them together. So you have a territory which is discontiguous, but whose total real estate footprint is comparable to that of, let's say, Luxembourg, and has 1 million people. That is a vision for a network state. It's not simply buying an island, it's buying 1,000 little pieces of property and networking them together through the internet. Anyway, the talk goes into more, or the article I pasted on how to build a network state, but why don't we end it up there?
Thank you so much. It was a pleasure having you, and thanks again. See you, Balaji.
Thank you.
Thanks everyone for joining in.